Shift focus now to the commodity markets. Manisha, what's the one commodity that you're tracking today?
Sonia, I'll take it over from Mitesh and continue to talk about metals there because we are closing this year in the negative for many of these metal prices. What a volatile year it has been when you look at the sector. All-time multi-year highs and then some correction and then some buying coming in back yet again in the fourth quarter or the last month of this year. Well, we have seen recession fears and aggressive central bank tightening continue to weigh onto the prices is the reason we are closing in the negative for many of these metal prices there. And even as there is buying coming back right now, it is a surge in the COVID cases in China. Restrictions that we have seen come in from other countries, including India, US, Japan, is what the markets are watching out for right now. Having said that, China has done a lot in the last 2 to 3 months to ensure that the infrastructure, real properties, realty sector are looking at some support. For the Chinese new home purchases, this is the number that we're working with right now. It has seen a decline by nearly 30% in 2022. Having said that, the Chinese banks, commercial banks that is, have extended $162 billion in new credit lines. They also have done liquidity injections. They have lifted the ban on equity refinancing for property companies. And we also have seen cuts in RRRs and a lot that China continues to do. And the plan for until 2025 and 2027 is to continue to support their realty sector there. So that is what we will watch out for. In the meanwhile, it also is about the weak commodity prices that have continued to put pressure on margins is the reason you have seen companies like Glencore, Trafigura, Alcoa, all of them say that they're looking at layoffs and some production curbs as we move into 2023. So the expectation right now is that you could be looking at a tepid start into 2023 in sense of metal prices, but then going forward, the EV, renewables demand, all of that is going to come back. It is also going to be about the multi-year low inventories that will continue to support. Remember, when you look at across metals, it is only between 2 to 8 days of global consumption worth of inventories that many of these metals right now have. So even as we did all-time highs in copper, aluminum and nickel, we are closing the year negative for copper and aluminum, down between 14 to 15%. From its highs, it is down by 23% for copper, and aluminum is down 40% from its all-time highs that it hit in the month of March. Nickel, after hitting $100,000 a ton, has come down, but it is holding around 30,000 tons. So from highs, down by 36%, but for the year, 46% on the higher side. Nickel actually is the only major base metal which is closing in the positive, and a very great number there. Same is the case with the ferrous metals as well, off its highs, and for 2022 as well, posting a negative on your screens.
Okay, thanks a lot, Manisha, for that. Let's slip into a quick break, though. On the other side of the break, our special segment, it's the last segment of It's the Economy this year. So Lata will be connecting with Puneet Chhatwal, the MD and CEO of Indian Hotels, to discuss how demand trends are faring and the New Year celebrations, what's in store for the hotel industry, all that coming up.